Okay, welcome back everyone. Good evening. This is Sham Kakod here. Before I start the discussion, if there is no issue with the sound, please give me a thumbs up. Do let me know that I'm audible so that we can start the discussion again. Okay, done. Thank you. Now, let's change the pace of the class, right? Since morning, you have been studying continuously. Now, based on the discussion that we have had so far, is it okay if we solve certain questions? Let me know. Because as far as I know, whatever we have discussed so far, that's more than sufficient to address the kind of questions UPSC has asked in the last couple of years. Let's solve. Let's solve. Automatically, you'll understand whether what you're reading is important, relevant, right, etc., etc. Let's solve certain questions. Then we can again start the discussion. Start. Okay, 42% of answer correctly. Why? This should be more, right? Let's start. What is the question? The money multiplier in the economy, will increase with which of the following? Increase in the CRR. Please tell me, if CRR increases, will the money multiplier increase or decrease? Yesterday we have discussed all of this, by the way. Don't say, sir, you have not discussed anything here. Please do let me know. If CRR increases, what will happen to money multiplier? Will the money multiplier increase or decrease? Money multiplier with a rise in the CRR will decrease. Anybody has a problem with this? Let me know right now. Anybody has a problem with this? Money multiplier with the rise in the CRR will decrease. It will not increase. Right? So option A is wrong. What about option B? Increase in SLR. Just like CRR, we are increasing SLR. So that will also reduce money multiplier. Increase in the banking habit of the people. What do you mean by increase in the banking habit of the people? More people will keep deposits with the bank. More people will keep, right? Let's say fixed deposit, savings bank account, recurring deposit, etc., etc. Now think of this and tell me, if people will start depositing more and more money into the bank, will the money multiplier increase or not? Does it make sense to you? If people will start depositing more money into the bank account, right, can it increase money multiplier or not? Think of it. It should make perfect logical sense to you. Right option is option C. An increase in the population of the country doesn't guarantee a rise in the money multiplier. So right option is option C. Can we go forward? Anybody has a problem? Anybody has a doubt regarding what we have discussed? Please do let me know. Otherwise, I'll go to the next question. Is it okay with all of you? Nobody wants to answer. Sunday evening session, I don't know what happens to the students. Nobody wants to participate. Nobody wants to answer. Okay. Next question. Take up the next question. 39% have answered correctly. This should be easy. It's not difficult. It's not out of whatever we have discussed. That is, whatever we discussed, the questions are from that area itself. In India, the central banks function as the lender of last resort. Right? If you have revised yesterday's PPT, annotated PPT, I've written the term lender of last resort. Where? Where have I written the term lender of last resort? I've written it under the functions of RBI. Specifically under the functions of RBI, I've written it in the slide where it is there. RBI is the banker to the bank. Yes, banker to bank. There is one more term. RBI is the regulator of the banking sector. And in addition to this, I wrote one more point. RBI is also referred to as a lender of last resort. If you don't trust me, please open annotated PPT, you will find it. RBI is also referred to as a lender of last resort. Why? Why is RBI referred to as a lender of last resort? Whenever bank is having any kind of an emergency, any kind of a crisis the bank experiences, the bank can always approach Reserve Bank of India and borrow from Reserve Bank of India. And because in case of emergency, bank is allowed to borrow from RBI, RBI is called as a lender of last resort. So the right option for the question will be statement 2 only. Statement 2 only. Lending to trade and industry bodies. Please tell me any tool that RBI uses where they will provide loans to industries directly, by the way. Think of it. Any tool that we have discussed, right, so far in the last one day, where RBI will lend directly to industries. No, RBI doesn't give loan directly. RBI uses any of these banks. RBI doesn't give loan directly. So one is wrong. Lending to governments to finance budgetary deficit. That was allowed earlier, and that is also not because RBI is referred to as a last resort, a banker of last resort. No, RBI is referred to as a banker to government of India. That was the precise reason why RBI was allowed to give loans to government of India. But here, no, it is not the function under the bank of last resort. Right. So right option will be second statement. That is option B here. Anybody has difficulty? Let me know. Anybody has difficulty in answering these kind of questions? Okay, 39% have answered correctly. Why? Let's start. Consider the following statements. The governor of Reserve Bank of India is appointed by the central government. Did I say this statement while discussing Central Board of Directors? Who will appoint Central Board of Directors? Whether this is governor, deputy governor, right? 10 experts. Who will appoint all of them? Government of India. First statement is correct. Second, certain provisions in the Constitution of India give the central government the right to issue directions to RBI in public interest. Is it part of the Constitution of India or Section 7 of RBI Act of 1934? Let me know. Is it part of Constitution of India or it is just a part of one of the sections of RBI Act of 1934? That is in the public interest. RBI government shall issue direction to RBI which should follow this direction. It is not part of Constitution of India. In fact, please remember this. The only place RBI is mentioned in the Constitution is under Schedule 7 of Constitution of India. Seventh schedule. Right, I repeat the statement. The only place where RBI is mentioned in the Constitution is seventh schedule. Again, that is not a constitutional body. RBI is not a constitutional body. Then some of you will say, sir, it is mentioned in the seventh schedule. My dear, seventh schedule discusses division of powers between center and state. Correct? What subjects will fall under the central government? That is union list. What subject will fall under the state government? State list. Then there is a concurrent list. Right? In the union list, In the union list, Reserve Bank of India is actually mentioned. It's not a constitutional body per se. In the distribution of powers, right, the Constitution of India says RBI will come under the purview of central government of India. That's it. But apart from that, there is no mention in the Constitution. The governor of RBI draws the powers from RBI Act. Straightforward, yes. And whatever is a function of RBI governor, whatever RBI does, everything will come from the RBI Act of 1934 itself. So first is correct, third is correct. Right option for the question will be option C, 1 and 3 only. Next one. Okay, again 36%. One third of the people are answering. Why? Right? With the reference to urban cooperative banks in India, consider the following statements. Statement 1. They are supervised and regulated by local boards set up by the state government. Is it correct? Let me know. We have discussed this by the way. Right? Don't say, sir, you have not discussed it. Right? The cooperative banks, urban cooperative banks are regulated by state government. Correct? No, these are mainly regulated by Reserve Bank of India. Right? First statement is wrong. Anybody has a problem with this? They can issue equity shares and preference shares. This statement is correct. Although I have not used the term preference shares, don't worry. It is correct. The urban cooperative banks, now with the amendment to Banking Regulation Act 2020, now they are allowed to issue preference shares as well as equity shares. Please hold on to the question on the term equity and preference. We'll discuss this. Don't worry. Next week, Pakka will discuss what is an equity, what is a preference share. Please don't worry. We'll discuss this. But this statement is correct. They were brought under the purview of Banking Regulation Act 1949 through an amendment in the year 1966. Even this statement is correct, right? So 2 and 3 are correct. Right option for the question will be option B, 2 and 3 only. Okay, half of you have answered correctly, but this should be very easy for you, right? It's an application based question. To combat demand side inflation, which of the following activities would be preferred by Reserve Bank of India? Buy government securities. Please tell me, if RBI will purchase government securities, will it cause inflation or will it control inflation? Don't you think that will cause more inflation in the market? First one is wrong. Increase repo rate. Yes, by increasing repo rate, RBI can ensure demand right in the market will come down. Inflation will also come down. Print more currency. But obviously, if RBI prints more currency, what will happen to the supply in the economy? Supply will start increasing. Right. So third one is also wrong. Decrease SLR. If RBI will reduce SLR, right, more loans will be issued by the banks. It will increase money supply, causing inflation. So fourth one is also wrong. Right. What is left out with you? Only two is correct. Right option is option B. Only two. Any problem with this? Please do let me know. Any of the question? Anybody feels right? This is not clear. There is a problem. That's a confusion. Please do let me know. Okay, let's start. 32% have answered correctly. In the context of Indian economy, which of the following is or are the purpose or purposes of statutory reserve requirement? What kind of statutory reserve requirements we have in India? Let me know. Right, reserve requirements. What kind of reserve requirements? I'll say CRR is one of them. SLR is the second. Any problem with this? What kind of reserve requirements? Right, that is CRR as well as SLR. These are the two reserve requirements. Now, why? What is the objective of both CRR and SLR? What is the objective? And many of you will simply say statutory liquidity ratio. Many of you would have considered only SLR and made a decision on the answer. Statutory reserve requirements are two types, CRR and SLR. There are two types of reserve requirements. What are the objectives? Why do we have both the CRR as well as SLR? One, to enable the central bank to control the amount of advances that the banks can create. First one is straightforward. All of you will agree? First one will be straightforward. That is, the Reserve Bank of India wants to control how much loans the banks will create using the statutory reserve requirements. What about CRR? Please tell me. Look at the second point and tell me, right? Don't you think CRR and SLR again is related to controlling the safety or ensuring there is a safety of a depositor's money in the banking sector? Yes or no? For example, here is a bank. Here is a bank. It will collect a deposit of, let's say, 100 crore rupees. Why does RBI impose a CRR? Tell me. Why does RBI impose CRR? RBI wants to ensure that RBI wants to ensure that part of the deposit will be kept with RBI so that, right, the bank will not be taking higher risk in the market with people's deposit. The bank will not be taking higher amount of risk in the market with people's money, people's deposit. Right, to ensure safety of the depositors, to ensure liquidity in the bank, RBI will also use the tool such as CRR. So second point, to make people's deposit with the banks safe and liquid is correct. To prevent commercial banks from making excessive profit. Tell me, does RBI use any tool to control profits earned by the banks? Is RBI using any tool to reduce the profits earned by the banks? No, RBI doesn't use any of these tools. Third one is wrong. To force the banks to have sufficient vault cash to meet their day-to-day requirement. It is more to do with, let's say, liquidity coverage ratio concept. That fourth one is also wrong. So first one is correct, second one is correct. Right option for the question will be option B, 1 and 2 only. Right, 1 and 2 only. Okay, again, logic is simple. Can RBI control liquidity in the banking sector using CRR and SLR? Think of it. Think of it. Some of you are saying, sir, second one is a problem. Can RBI use, right, these tools to control how much is the liquidity in the banking sector? Of course, yes. There are so many things that RBI can do here. First and two, 1 and 2 are correct, right? So the right option will be option right B. Okay. What is vault cash? Vault cash, my dear. Do you remember LCR? Think of it. Do you remember LCR? In LCR, RBI says 100% of your next 30 days money outgo, you'll have to maintain in the form of high quality liquid asset. The kind of high quality liquid asset can be gold, government bonds, government securities, or you can also keep cash, which means in the vault. Vault simply means right, the place. In the vault, right, you are allowed to keep government securities, you are allowed to keep cash. That is called as vault cash. Okay, so first and second are correct. Right option will be option B. Let's go to the next one now. Slightly tricky, please be very careful. Okay, 43% have answered correctly. Why? It should be more, right? Let's start. Which of the following measures would result in an increase in the money supply in the economy? Start with the first one. Purchase of government securities from the public by the central bank. Will it increase money supply in the economy? Yes. First one is straightforward. First one is not a problem. Second one is slightly tricky. Deposit of currency in commercial banks by the public. Please do let me know. How many of you think people depositing currency in the bank will increase money supply? It is wrong. It is wrong. It will not increase money supply. Many of you would have chosen second one as correct one. No, second one is wrong. Let me prove it to you. Let me prove it to you. In fact, based on this, only one more question was asked by UPC. I'll show it. Right? How do you calculate M3? M3. How do you calculate M3? Can I write the formula for M3? M3 is equal to cash held by the public, you and me, plus, right, the time deposits in the banking sector, plus demand deposits in the banking sector. All of you will agree this is M3? Now let's throw certain numbers. Let's put certain numbers. Okay. Let's say cash is 100 rupee, right? Let's make it 200. Let's say cash is 200, time deposits are 500, and demand deposits are 300 rupees. What is the M3 here? What is M3? M3 is 1000 rupee. Now let's say you will take 100 rupee cash. You will take 100 rupee cash, put it in the bank in the form of savings bank account. Is it okay? You will take 100 rupee cash, put it in the bank in the form of savings bank account, which means now cash will come down to 100 rupees, right? Savings bank account will be part of demand deposit. So it will become 100 rupee more now. It will become 400 rupee because you have deposited 100 rupee in your savings bank account, right? The time deposit will remain same, 500 rupees. Now please tell me how much is M3, right, in the second case. How much is the M3 in the second case? 100 plus 500 plus 400,000 rupees, which means money supply in the economy does not change. Anybody has a problem? Money supply in the economy does not change, right? So second one is wrong. Borrowing by the government from the central bank. If right, the government of India will borrow from the central bank, let's say under the ways and means advances, or right through any means, please tell me what will happen to money supply. Money supply automatically should increase. So third one, right, will lead to increased money supply. Sale of government securities to the public by the central bank, exactly opposite of first one, right? The fourth one is wrong. So first and three, right, the point number one and point number three are correct. Right option will be option C here. Now, based on similar concept, I will not start the polling. Please look at it and answer to this question. I'll not start polling, right? You can directly answer. Waste of time because we have discussed this. Look at the question and tell me what is the answer to this question. If you withdraw 1 lakh rupees in cash from your demand deposit account at your bank, the immediate effect on the aggregate money supply in the economy will be what? All of you will agree? It should be option D. Some of you are saying option B. How? How option B? Please do let me know, because just now I've proved it should not change. It should not change the money supply. It should be option D here. Anybody has a problem with this? If you have a problem, please do let me know. If you have a problem, please do let me know. Don't say faculty is not discussing. Please do let me know so that I can prove it again using the same equation. M3 is equal to cash, right, plus demand deposit plus right time deposit. I will remove 1 lakh from, right, let's say the demand deposit and add it in the form of cash. So M3 again will remain same. So the right option for this question should be option D. The money supply will remain unchanged. It will remain same. It will remain unchanged. Done? Let's go to the next question now. Before you start answering, please let me know, did I discuss the concept of bank sati in the class? Right? In webinars, etc. I have discussed. I know that. In class, please do let me know, have I discussed the concept of bank sati? Some of you are saying yes, and some of you are saying no. How is that possible? In this batch, by the way, not in earlier batches and not anywhere in the weekend batch. Right now, that is happening. I have not discussed. Pakka, right? I have not discussed, because I'll discuss now. Okay, let me explain to you. What is the concept of bank sati? Let me explain to you. Now, one of the issue that government of India, let's say the Reserve Bank of India faced was, the bank branches cannot be set up in all the villages. All of you will agree with me? The bank branches cannot be set up in all the villages. That's not possible. Why? If you set up bank branches in every village in India, in every village, the cost of operation would be very, very higher. The revenue capacity would be very, very low. How much deposit then the bank can collect from a village, right? But the number of people will be there, right? Electricity cost, etc., etc. So the cost of operation would be higher compared to revenue capacity. But now there is one more concern. If you do not provide the banking services in the villages, what about the people who have bank account in the villages? What about the people who will receive subsidy, LPG subsidy in their bank account? What about PM Kisan benefit that the farmers will receive in the bank account? So bank branch is not there, then it is a problem. If the bank branch is set up, one more problem. What is the solution then? Post 2006, RBI has introduced the concept called as business correspondent. Different books use a different name, don't be confused. Business correspondent or banking correspondent. Banking correspondent, or else one more name is bank sathi. One more name is bank sathi. Business correspondent, banking correspondent, or bank sathi. Right? What is the objective of a business correspondent or a banking correspondent here? Imagine this is a city, and in the city there is a bank, SBI. Now there is let's say 2 or 3 villages surrounding the city. In these cities, on behalf of State Bank of India, right, these business correspondent or bank sathis will provide basic banking services to the customers of SBI. Simple idea. On behalf of right, the SBI, right, one person, or let's say a payment bank, they will also do this. They will provide a basic banking services to the customers of State Bank of India. And for providing these basic banking services, they will charge a certain amount of money, they will collect, right? Charges are imposed and they will collect it. Now, what kind of basic banking services are provided here? Right? For example, you want to deposit your money into your bank account. You want to withdraw money from your bank account. You have received a PM Kisan subsidy in your bank account, you want to withdraw. You have received pension payment, you want to withdraw. You have got LPG subsidy, you want to withdraw. You want to apply for a loan, application you can give. You want to open a new bank account, application you can provide. So basic banking services are provided by these right representatives of the bank who are called as a business correspondent or bank sathis. Right, this is basically the model of business correspondent. Any problem in this? Please do let me know. Any problem in anything that I've discussed? Now look at the question. Please look at the question now. What is or are the facility or facilities the beneficiaries can get from the services of business correspondent or bank sathi in branchless areas? Statement 1. It will enable the beneficiary to draw their subsidies and social security benefit in their villages. Of course, yes. It will enable the beneficiary in the rural areas to make deposits and withdrawals. Even this is correct. So both the statements are correct. Right option is option C, both 1 and 2. Now some of you are asking, how is that possible to withdraw money? How is it possible to withdraw money, right, when the bank branch is somewhere and I'm sitting in a village? I'll give you a very simple example. There is a tool called as micro ATM. You will get the picture of micro ATM in the Google also. Just look at it. Right? There's a tool called as a micro ATM. Now, what is this micro ATM? Generally, the micro ATMs will have right an antenna here, and they will have a fingerprint scanner here. They will have a screen, and below this they will have digits, right, numbers, etc., etc. This is generally how the micro ATM is present. Now have a look at this. If a customer wants to withdraw money, right, they can simply go to this person who has the micro ATM, provide, right, basically provide basically the account number. They will key the account number, and then right the person can provide the pin, that is input the pin, and right the person banking correspondent or business correspondent will take out the cash and give it to the person, and essentially a receipt will come out and the receipt will be given to the person. Right, this is generally how the micro ATMs are used to withdraw money or even deposit money with the business correspondent. Right, so this is the basic idea. Please remember this. What is social security? Right, imagine government of India has right a widow pension scheme, that is social security benefit. Right, government of India will provide certain subsidies for poor people, right, for children. These are all referred to as a social benefits or social security benefits. Next one. Okay, 55% have answered correctly. Which of the following steps are used in contractionary monetary policy? Contractionary means what? Money supply has to come down. Agreed? Money supply has to come down. Increase the CRR. Will the money supply come down? Yes. Increase the repo rate. Money supply will come down. Decrease in the SLR. Money supply may increase. So first one is correct. Second one is correct. Right option will be option B, 1 and 2 only. 1 and 2 only. Okay. Next one. This is done. So done. These are the questions which have been asked, right, in the last couple of years. Okay. Couple of more are there. Solve it. Okay, let's start. 41% have answered correctly. One of the reason some of you would have made a mistake is you would not read the statement correctly at the end. You would have not read the statement correctly at the end. Please read the statements very carefully. If RBI decides to adopt an expansionist monetary policy, which of the following RBI will not do? I hope you understand. Which of the following RBI will not do? Right? Some of them RBI will do to increase money supply, but the question is not on that. Question is which of the following RBI will not do? Cut and optimize the statutory liquidity ratio. Don't you think this is expansionary policy? I hope you understand. This is expansionary policy, right? So this is expansionary policy. It is not the answer to the question. Increase the marginal standing facility rate. If RBI increases MSF rate, don't you think banks will take lesser loan from RBI? If banks will take lesser loan from RBI, is it expansionary? No, it is contractionary. So RBI will not do the second one. Third one, cut the bank rate and repo rate. Right? If RBI will cut the bank rate and repo rate, money supply will increase. It is expansionary policy. So it will do one and it will do three. It will not do the second one. Right? So the right option for the question will be option B, two only. Two only is correct. Okay, so these are the various questions which have come in the last couple of years from the banking chapter. Please do let me know if there are any issues. Otherwise, we'll continue with the discussion in the banking. Any questions? Any problem with what we have discussed? Any question is a doubt, etc., etc.? Let me know. Can money aggregate decrease? Of course, yes. Right, M3 can be reduced. How M3 can be reduced? Please tell me. If RBI will increase, right? A simple question to all of you. Think of this. Let's say SLR right now is 18%. Whatever the number is, don't worry. Imagine SLR is 18% and CRR is 4%. What if I were to say RBI will increase SLR to 40% and CRR to 15%? Please tell me what will happen to money supply in the economy. Will M3 increase or start decreasing? Think of it. Will M3 start increasing or decreasing? Automatically M3 will start decreasing. All of you will agree with me? Any problem with this? Let me know. Baba, leaderboard. I'm discussing something important. You people are focused on leaderboard. Take it. Right? What will you do with the leaderboard? Let me know. Right? What is achievement in the leaderboard right now? I'm discussing something important here, my dear. If RBI will increase SLR from 18% to 40% and CRR from 4% to 15%, what will happen to monetary aggregates? Will the money supply increase or decrease? Right? I hope you understand. The money supply will fall down. It will simply crash. It will simply fall down in the economy. Right? Money multiplier will start coming down in the economy. Why? Right? SLR and CRR will take out lot of money from the system like this. So I hope you understand. I hope you understand. Monetary aggregates can keep on changing based on how RBI will use them. Right? In fact, earlier, both SLR and CRR were very high in India. I hope you understand the point here. Earlier, both, right, the CRR and SLR were very, very high in India. Right, at one point of time, CRR was somewhere around 25%, SLR was somewhere around 40%. So you can imagine from that, we have dragged it down. We have simply brought it down to CRR around 4% now, SLR around 18% now. Right, so that is the argument. Any problem, any other issue that you people have, please do let me know. Otherwise, we'll continue with the discussion then. If there are no confusions, no issues with whatever we are discussing, I'll restart the discussion after the questions are done. Okay, let's start. Small Finance Bank, SFB. Couple of more concepts are there. Banking will be completely done for you people. Couple of more concepts. Small Finance Bank, and there is one more concept called as a payment bank. And these types of banks are very new to India. Right? If you look at, let's say, 10 years ago, right, or 15 years ago, there was no idea of a small finance bank. There was no idea of a payment bank. These models are very, very new to India. Now, before anybody will ask me, sir, why do we have different types of banks like this? Right? I'll give you one basic argument. and tell me, does it make sense to you or not? Imagine you are the RBI governor. Imagine you are the RBI governor. I will come to you and I will ask for a banking license, not just any banking license, right? I will ask for universal banking license. Now, many of you will ask me, what is universal banking? I'll explain that. Have patience, right? Now, I will ask for universal banking license. What is the meaning of a universal bank? Universal bank, example, SBI, ICICI Bank, right? Or for that matter, HDFC Bank. All these are referred to as a universal bank. But what is the definition? Whenever you talk about a bank, we generally divide the functions of the bank into two parts. One is called as a primary function, and obviously the second has to be called as secondary function. Then one is called as a primary function, and the latter one is called a secondary function. What is a primary function? Collection of deposits and issuing loans. Collecting deposits and giving loans. That's a primary function. And historically, if you see, banks were involved in primary functions. Banks were mainly set up for primary functions. But don't you think over a period of time, banks have developed many other functions? For example, if you ask me, what about gold loan facility? What about gold loan facility? It has been developed by the banking sector over a period of time. What about locker facility? Have you heard of locker facility provided by the bank? Locker facility, storage facility, right? Where many people will store their gold, many people will store their right documents, etc. Locker facility, right? Many of the banks will also provide you insurance services, services, etc. Many of the banks will provide forex remittances. Forex remittance means, imagine you go to USA, you have earned in dollar, you will send money to your parents, right? Somebody has to convert that dollar into rupee. All of you will agree? That is forex remittance services. So understand the logic here. Banks generally were set up historically to provide primary functions. But over a period of time, many other functions have got added to the banking sector. These are called as collectively secondary functions. Now, whenever you talk about a universal bank will provide both primary as well as a secondary function. Simple. Whenever you refer to a bank as a universal bank, it will provide both primary as well as secondary function. For example, take a State Bank of India. Take the example of State Bank of India. Is it okay if I say State Bank of India will provide all the services that I've listed here? Is it okay? State Bank of India will provide all the services that I've listed here. What about Bank of Baroda? It will also provide all the services that are listed here. But on the other hand, there is also a set of banks which are called as a differentiated banks. There is also a set of banks called as differentiated banks. Now, what is this idea of a differentiated bank? Differentiated banks do not provide the primary plus a secondary, all these functions. Very few functions will be provided by differentiated banks. Very few of the functions. And there is no fixed list. RBI will decide. RBI will say, you provide only this function. You provide this function, etc., etc. For example, we'll discuss this again, but don't worry. The best example for a differentiated banks in India is one payment bank. One is a payment bank, and the second one is small finance bank. We'll discuss both of them now. One is a payment bank, second one is a small finance bank. For example, in case of payment bank, RBI does not allow, I repeat, RBI does not allow the payment bank to give loans. RBI does not allow the payment bank to provide loans. No credit facility, no credit card, no loans, nothing. Payment banks will not be allowed to do that. What is their specialty? You'll understand in some time. Whereas in case of small finance bank, RBI says small finance banks will have to maintain PSL of 75%. Now, can I simply say these kind of banks are not going to provide all the primary plus secondary function? Very few of the functions as given by RBI will be provided by them. Now, many of you will ask me, sir, why? Why is that so? Why does RBI promote these kind of banks when we already have, let's say, ICICI Bank, when we already have a State Bank of India, when we already have so many other banks? Why again these kind of banks? Let me give you a very simple argument. You are the RBI governor. I will come to you now and I'll apply for universal banking license. Please tell me, will you simply provide this universal banking license to me? Should you provide directly the universal banking license to me? Is it efficient system? You should say no. Some of you saying yes. You should answer no, sir. Why? What if I don't have any prior experience in banking? Tell me, right? I have lot of money, right? But I don't have any prior experience in banking at all. Should the RBI take a higher risk by giving me a universal banking license where I will provide so many services, right? I'll be dealing with the customers' deposits as well. Should RBI do that? No, RBI will never do that. What RBI says is, directly universal bank license I may not give. I want you to get experience of banking. So take a payment bank license. Take a payment bank license. Prove to me that you are working very well. So maybe after 4 to 5 years, I will ask you to get converted into small finance bank. Maybe, right? After you provide certain number of years of service like this, and I'm happy with you. I know now that you can handle a bank. I will allow you to get converted into small finance bank. Work as a small finance bank. Maybe another 5 to 6 years. If I am confident that, okay, you are working very well as a small finance bank, maybe then I will allow you to convert as a universal bank. Don't you think this is a better methodology to allow the banks to, right, evolve over a period of time rather than directly giving a license for universal banking? I hope you understand, right? Don't you think this kind of a evolution, asking them to get experience in different areas, is a better system than directly allowing them to provide universal banking services? Because universal banking covers so many features, so many functions. What if they, because they don't have any banking experience, they will collect the deposit from the customers, right, to take wrong decisions? People's deposits will be lost. This is the reason, right? I hope at least now it makes a sense why, despite having so many banks, right, RBI will still promote payment bank. RBI will still promote small finance bank, right? Because there is always right, a need to promote these kind of banks so that over a period of time these banks can mature as very large banks, that is universal banks. Okay, let's start. Now, what is this idea of a payment bank and a small finance bank? Let me explain. Small finance banks will promote a financial inclusion. Now, many of you will start asking me, what do you mean by financial inclusion? Let me explain it. Financial inclusion refers to providing financial services, providing financial services to the needy people, to the needy people in a cost effective manner. In a cost effective, in a cost effective manner. I'll repeat the definition again. What is financial inclusion? It refers to providing financial services to the needy people in a cost effective manner. The best example for a financial inclusion is a Pradhana Mantri Janadhan Yojana. Pradhana Mantri Janadhan Yojana. Sir, how? How Pradhana Mantri Janadhan Yojana is an example of a financial inclusion? Let me give you the explanation here. Imagine there is a poor person. The poor person wants to open a bank account. Tell me, don't talk about Jan Dhan Yojana now. Tell me, Do you think it is easier to open a bank account by a poor person? Let me know. Right? Remove Jandan Yojana and then talk. Right? How many of you believe that, or you are under the impression that it is very easy? Person will walk into the bank and the bank account will be opened. It's not that easy. Right? It's never easy to open a bank account in India. I'll tell you how. You will go to a bank, you want to open a bank account. The manager will hand over, right, bunch of paper to you. Not just one paper. There'll be one side, second side, third, fourth. There'll be around 5 to 6 pages. They will hand it over to you. They will ask you to fill it. But this person is already illiterate, let's say, or he doesn't have so much of literacy also. Second, even if you can fill up all the right documents, now the bank will say, please give me a proof of your residence. Those who have opened your bank account, right, please do let me know. Those who have opened your own bank account. And when I say own bank account, those who have gone to the bank to open the bank account. I know some of you are working in companies. The company will have a tie-up with a bank, right? In that case, the bank representative will come to you, do every work on your behalf. Yes or no? At least those who have this right experience, do let me know. If you have joined a company and company already has a tie-up with the bank, the person will come to you and he'll simply say, sir, don't worry. You don't have to be worried. This is the form. Sign here, sign here, sign here, sign here. Right? You are very happy. Sign, 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 sign. You will get the document. That's it. Your bank account is open. In couple of days, right? He will only come, hand over the ATM card to you. He will only come, hand over the checkbook to you. But those who have experienced opening a bank account by going to the bank, they will attest to my argument that lot of documentation is involved in opening a bank account. The bank manager will say, please show me your ID. And right, let me know if somebody has experienced this. You will give an ID to the person. They'll say, get a photocopy of this. You will go get a photocopy. The person says, in the photo, right, the photocopy that you have brought, it is very dark. Right, see, your photo is so clearly visible in an ID card, but in the photocopy, that is a Xerox copy, it is very dark. How do I know that is your photo? So again, you will be asked to go to Xerox shop, get one more photocopy, lighter photocopy. Now you will hand it over, right? They will ask you to sign in the photocopy version, attestation. You will sign. Now the bank manager will hold this photocopy, right? That is address proof, or let's say ID proof. And right, he will hold, right, let's say one more document. Let's say your ID proof on one side, address proof on the other side. And he'll simply look at it and say, spelling is different. Let me know, have you people experienced it or not? For example, I'll prove it. For example, my name is Sham S. Kagod. Okay, my name is Sham S. Kagod. Okay, let's say in one of the document, it is written Sham S. Kagod. And in another document, it is written Sham SK. That's it. Another document, it is Sham SK. The manager will say, names are different. How do I know that this K stands for Kagod? No. Both the documents are different. Now you will have to go search for another document, etc., etc., do circus. Right? So all I'm trying to convince you people of is a simple fact that opening the bank account is not that easy. Not that easy. Right? Even if you open the bank account, what about minimum balance? Have you come across this one more term? What about minimum balance? The bank manager would keep on telling you when they're right handing over the debit card to you, ATM card. We are giving the ATM card to you. Please, right, keep it very carefully. But one condition, right, you have taken a debit card, that is ATM card, and you have also taken checkbook, which means at any point of time, your bank should have a minimum balance of 1000 rupee. Correct or wrong? At any point of time, right, you should have a bank balance of 1000 rupee. If you do not have a bank balance, they will charge you. They will penalize you. In fact, in ICICI bank, it is 10,000 rupees. In other private sector bank, it is much higher. So you are talking about a poor person, right? Apply this. You are talking about all of this, right, to a poor person, right? Don't you think documentation will become a problem for the person, right? The person lives in a village. He might or she might have a, right, this identity card, but not that document, right? There could be a mismatch of the name, etc. Even if all of this is done, if the person is a Manrega employee, you are asking the person to have a minimum balance of 1,000 rupee. Manrega wages, they will get, let's say, 200 rupee. You're asking them to maintain 1,000 rupee, which is 5 days wages for them. 5 days of wages for them. So imagine to what extent access to banking services would be, right, away from this kind of a people. That is the precise reason what government of India has done is they've introduced a scheme by the name of Pradhana Mantri Janadhan Yojana, PMJDY. Under PMJDY, documentation not required. All you need to do is have Aadhaar. That's it. Right? Requirement of documentation, house, right, that proof, ID proof, etc. not needed. You have Aadhaar, more than sufficient. Open the bank account. Now, what about this minimum balance? You have a PMJDY, Jandan Yojana account. You don't have to maintain any kind of balance, right? Zero balance is okay. Zero balance is okay in your bank account. Now, please tell me, if the government is providing a scheme wherein all you need to do is have Aadhaar plus, right, even zero balance is okay in this bank, can I say this is nothing but financial inclusion? Let me know. Can I say this is nothing but financial inclusion? Government is ensuring financial services are provided to the needy people in a cost effective manner. All of you will agree this is a financial inclusion. Anybody has a doubt, please do let me know right now. Right? Small finance bank is an example of a financial inclusion. I'll prove it. Payment banks are also type of a financial inclusion. I'll discuss that. Don't worry. Now, what is a small finance bank? Small finance banks, right, are basically types of banks which are more targeted towards villages, right? Targeted towards the rural part of India. Why? The RBI says these banks will have to maintain a PSL of 75%. Right? The RBI says a condition is they will have to have a PSL of 75%, minimum PSL of 75%. Point number two, the target in the small finance bank is to provide loans, provide credit to small businesses, small and marginal farmers, micro and small industries, and various other unorganized entities which are present in the economy. Right? So, if your target client is this only, don't you think you're going to promote financial inclusion then? Right? In the small finance bank, minimum equity capital should be 200 crore rupees. Minimum equity capital should be, right, 200 crore rupees, and up to 74% of this you can bring it in the form of foreign investment. That is, the argument is simple. How much money you should invest to start this, right, a small finance bank? You should invest at least 200 crore rupees, and up to 74% you can bring it in the form of foreign investment, right? So these are the conditions. Now, apart from this, what are the functions of the small finance bank? It will accept a deposit. It will provide loans to underserved as well as unserved population in the economy, such as farmers, small businesses, micro enterprises, right? Traders in rural India, etc. Right? That is the function. And because their target clients are these generally find it very difficult to get access to institutional credit. We'll simply say SFB is a promote of financial inclusion. SFBs promote a financial inclusion. Now, what are the conditions? Prudential norms means conditions. What are the conditions to operate SFB? First one, the SFB has to maintain CRR and SLR. SFB has to maintain both the CRR as well as SLR. 75% PSL, right? That is a condition. At least 75% of the loans given, sorry, at least 50%, not 75%, at least 50% of the loans given should be of a value less than 25 lakh rupees, right? Argument is simple. If there is a limitation on how much big loans that you can provide, right? If RBI says at least half of the loan should be below 25 lakh, it simply means you are going to provide loans to more people, more borrowers in the market, right? So these are the conditions which are applicable to small finance banks. Any difficulty? Can we go to the next one? Any difficulty? So the next concept is a payment banks. One more type of a differentiated bank, payment bank. Now, what is the payment bank? Payment banks are a type of a differentiated banks wherein RBI has put up a minimum investment, minimum paid up capital of 100 crore rupee condition. Again, here also foreign investment will be allowed up to 74% foreign investment you can bring in. Right? The payment bank has to maintain a minimum capital adequacy ratio of 15%. Right? A minimum capital adequacy ratio, CAR, minimum capital adequacy ratio of 15%. Either you can write CAR or capital to risk weighted assets ratio, CRAR. Minimum is 15%. But more importantly, at least half of this, at least 7.5% of this should be tier 1 capital. And the reason is simple. Tier 1 capital is more reliable, can absorb the losses much more, right, easily compared to tier 2 capital. That's the reason. Tier 2 capital should be limited to a maximum of 100% of total tier 1 capital. What are the functions of payment bank? Payment bank can collect deposits from the customers, but there is a condition. Payment banks are not allowed to collect per customer more than 2 lakh rupee deposits. I'll repeat the statement. Payment banks are allowed to collect deposits from the customers, but they are not allowed to collect more than 2 lakh rupee per customer. Many of the books have written 1 lakh rupee. Please update it. Now it has been doubled to 2 lakh rupees. Now it has been doubled to 2 lakh rupees. Point number 2. If the payment banks collect a deposit, what is the use of this payment, right? Sorry, deposits collected by the payment banks. How they are supposed to use it? 75% of these deposits, 75% of these deposits, the payment banks will have to invest, right, in government securities. Simple. 75% of these deposits, they will have to invest in government securities. And the remaining 25%, they will have to keep with other banks. They will have to keep in the form of deposits with other banks. Payment banks are not allowed to give loans. Payment banks are not allowed to issue credit cards. Payment banks will also be allowed to provide remittance services. Will be allowed to provide remittance services. What do you mean by remittance services? Transfer of funds. Remittance is nothing but a transfer of funds. For example, I'll give a very simple example here. Imagine there is a labor who is from one of the states from northern India, right? But the person has come down in search of labor to another state, or any southern from person from southern state has gone to northern India in search of job, right? That is wage employment opportunity. Now, when the wages are earned, part of the wages, if I'm that worker, I would want to send it to my family who is living in the state, another state, by the way. That is, sending the money from one part to another part is called as remittances. And payment banks will provide a remittance services, that is simply transferring of the funds, but they will charge certain commission for that as well. Okay, right? So these are the functions of payment banks. Now, please have a look at it. Don't you think with so much restrictions, revenue generation capacity for payment banks will be limited? Let me know. With so many restrictions, is it okay if I say revenue generation capacity for the payment banks will be limited? Correct or wrong? It is correct, by the way. That is the precise reason. When the model of payment banks was proposed by RBI, many private sector companies were interested. Many private sector companies were actually interested. Around 12 companies applied and got the license. Then they realized this revenue model is very restrictive. right? Because most of the profits earned by the banking sector comes from loans, but the payment banks are not allowed to give loans. So what would happen? Some of these people or some of these companies which got the license, they went to RBI and said, take it back. I don't want this. Please take it back. Right? Some of these companies submitted the licenses. Some of the companies went ahead, set up payment bank, and they incurred losses and they had to shut down. I'll give the best example. There was one payment bank which was owned by Aditya Birla Company. Okay, there was one payment bank license which was given to Aditya Birla Company. They opened the payment bank, they incurred losses, and they had to shut down the payment bank, right, which was operated by them. That is the reason payment bank, yes, it is very restrictive, but RBI says this is the model. If you want to operate, then come, use the license, operate. But over a period of time, if I feel you can conduct banking businesses, then I might allow you to get converted into small finance bank. This is basically the model of payment banks. Okay, right? So any issue here, please do let me know. Any issue? If there is no issue, I'll simply go to the next, that is committees. Right? Only two more concepts are left out: committees and NBFC. After that, done. Banking chapter is over for you people. Any difficulty? Anybody wants to have a discussion or want to ask a question regarding what I'm discussing? Please do let me know. What is the use of keeping the deposits with other banks? You will earn interest on it. Simple. You as a bank, if you keep money with other bank, you will earn interest, just like anybody. Okay. Demand deposit balance, my dear. The payment banks will collect demand deposits. They will collect demand deposits, right? And whatever is the amount of demand deposit collected, that is called as a demand deposit balance. 70%, I'm sorry, 75% of the demand deposits, they will have to invest in G securities, and remaining 25% of the demand deposits, they will have to keep it with other bank. Okay. Any problem? Can we go forward? What is the minimum amount of money required to establish a bank? From one type of a bank to another type of a bank, it will keep on varying. There is no uniform number, it will keep on varying. For example, you want to open a payment bank, minimum capital, minimum paid up capital that you must invest is 100 crore rupees. You want to open a small finance bank, it is 200 crore rupees. So from one type of a bank to another type of bank, it will keep on changing. Okay, any other questions? Any other doubt? Please do let me know. BharatPay, being a fintech company, has a banking license stated by former founder Ashnir Grover. Is this possible? Fintech company, it's a company by the way. Companies can apply for banking license. What kind of banking license? Right? Universal banking license, RBI is not giving now. They will provide a banking license for, right, a small finance bank. They'll provide banking license for payment bank. Yes, of course it is possible. Right? I believe you have seen the shorts, right? YouTube shorts of Mr. Ashnir Grover. Right. So based on that, you're asking me a question. How intercity checkbooks would be helpful? Intercity, right? Understand the name itself, intercity. And moreover, the concept of intercity checkbooks is outdated now. If you have a checkbook, if you issue a check, anywhere you can submit that particular check. Okay, anything else? Uh, Anything else? Please do let me know. Otherwise, I'll go forward. Anybody has got any kind of a doubt? If you want to ask me a question, I've activated live call feature also. You can use it. No questions whatsoever. Everything is full clear. Completely clear. Huh? Okay then. Let me continue. Done. Let me continue. Committee recommendations. Narsimham Committee 1991. Right? Two committees are important. Right? I'll add one more name of the committee. Just give me a minute. One is Narsimham Committee 1991. Second one is Narsimham Committee 1998. Now, why this is called as a Narsimham Committee? Simple. Right? It was headed by Mr. M. Narsimham. right? There is an economist, right, related again to RBI only, Narsimham. The chairperson of the committee was Narsimham. Hence, this is called as a Narsimham committee. But please understand this. There is one more name for this committee, Committee on Financial System. Committee on Financial System. Committee on Financial System. So please be very careful. Post 1991, Government of India set up two committees for giving recommendation to the financial system. Right? It is called as famously Committee on Financial System. One was set up in 1991 and this is referred to as CFS1. Let me know whether any doubt here. First one was set up in 1991, hence called as CFS1. Second one was set up in 1998, hence called as CFS2. Committee on Financial Services 1, Committee on Financial Services 2. Both of these committees, right, both of these committees were headed by Mr. Narsimham only. Hence, these are also referred to as, right, this is also referred to as Narsimham 1 and Narsimham 2 committee. Okay, now let's start. What are the recommendations in Narsimham 1 committee? First one, no further branch licensing. Now, what do you mean by branch licensing? Even today we have it. Branch licensing simply means, imagine you have a bank. In this year, you want to open 100 branches. You want to open 100 branches. Even today, RBI will dictate how many of these branches you should open in villages, how many of these branches you should open in cities. Is it okay? I'll repeat it again. Right? Even today, RBI will dictate how many of these branches you should open in a village, how many of them you should open in cities. Urban, rural, RBI has conditions. That is called as a concept of branch licensing. But you tell me, speak like an economist, not as a welfare economist, purely as an economist. Don't you think if a bank wants to open 100 branches, the decision as to where they should open the branches should be taken only by the bank? Yes or no? I'll repeat it again. If a bank wants to open 100 branches this year, don't you think the bank should decide where they should open these branches? But in case of India, RBI dictates. That is right a recommendation here. RBI should not have the policy of branch licensing. Let the banks decide. Let them take their own decision. You don't tell them. Let them take the decision. Okay. Second, no further nationalization of banking sector. In fact, I've told you this point earlier today. We have not gone for nationalization after 1980. Rather, now we are thinking of other disinvestment policy. So don't go for nationalization. PSL should be brought down to 10%. Right? Did we bring the PSL to 10%? No. PSL today it is a 40%. Phased reduction of SLR and CRR. This one we have done. Right? In fact, if you remember earlier, I told you, earlier, CRR and SLR both put together for many of the times was more than 50%. But over a period of time, what we have done? We have reduced both the CRR as well as SLR. Right? This has been implemented. Computerization in the banking sector. Has this been done? Those who have gone to a banking branch, those who have literally visited the bank, please do let me know. Are the banks using computerization or are they simply writing in big books now? Think of it. Earlier, what used to happen earlier, before introduction of the computerization, right? The banks used to maintain large books, khata books, right? They used to have very big books. Now we have discontinued all of it, right? We have introduced a computerization now. We have introduced computerization, right? So this is implemented. Debt recovery tribunals are to be set up. Please tell me, do we have DRTs in India now? Let me know. Right? Do we have DRTs in India now? Yes, DRTs are already set up. Did we discuss DRT earlier? Problem with the functioning of DRT, etc., etc. Setting up of ARCs. Do we have ARCs in India now? Think of it and keep on answering. Do we have ARCs right in India? Of course, yes. Right? That's the reason I said there are more than 20 ARCs which are working in India. Private sector entry should be allowed into the banking sector. They have allowed it. Payment bank, many private sector companies are there, right? SFB, many private sector companies are there, right? So private sector entry into these types of banking is allowed. Banks should be allowed to raise the capital by issuing the shares in the market. This is also allowed. Banks can go to the stock market, sell shares, right, and raise the capital. This is allowed now. 4-tier structure. Tier means a level. A 4-level structure was recommended by Narsimham Committee. At the top, we will have 3 to 4 large banks. Below 3 to 4 large banks, we will have 8 to 10 national banks. Below national banks, we will have local banks. And below local banks, we will have rural banks. Right? Everybody would be targeting, that is, every level, customer target would be different. Kind of loans given will be different, right? What is their priority area will be different, so that there is no overlap between any one of these levels. Every level will have a different objective altogether. This was basically the recommendation of Narsimham Committee 1. Now, Narsimham Committee 2, 1998. Point number 1, set up Credit Information Bureau. Now, what is this Credit Information Bureau? Please tell me, have you come across a term called as a CIBIL score? Let me know. Have you people come across the term called as CIBIL score? CIBIL score basically is a credit score, right? For example, you will go to a bank, you want to apply for a loan. Bank will ask you, what is your CIBIL score? Right? Generally, people will have a CIBIL score of 780, 800, right? 750. Some people will also have 400. Some people will have 500, etc., etc. It is a credit report of a borrower. What is the idea of a CIBIL score? If a borrower wants to take a loan, the lender must be able to find out in the past whether the borrower has taken the loan and has the borrower repaid the loan. Simple idea. In the past, has the borrower, right, taken the loan, and has the borrower repaid the loan correctly or not? That is given in the form of CIBIL score. That is given in the formula of CIBIL score. Right? Higher the CIBIL score, 800, 850, 890, higher the CIBIL score, it is always considered to be very, very good. Banks will also be very, very comfortable to give loans when the CIBIL score is very high. Because if you have a very high CIBIL score, it simply means you have taken loans and you have promptly repaid the loans. That's very important. You have taken the loans and promptly repaid the loans. So this idea of a Credit Information Bureau was recommended by whom? Narsimham 2, CFS 2. Merger of strong banks to make a much bigger bank, mega bank, so that it will start competing in the international market. It will provide, right, a large value of loans to infrastructure, etc., etc. Weak banks should be referred to as a narrow bank. Weak banks should be referred to as a narrow bank, and right, the functions should be very, very narrow for these weak banks. Now, what do you mean by this idea of a narrow bank? Right, have a look at this. Imagine there is a bank which has incurred huge amount of losses. Have a look at this. Imagine there is a bank which has incurred a huge amount of losses. And this bank has a certain amount of deposits collected from the customers. Now, if you are the RBI governor, should you allow this bank to continue to give loans to the borrowers in the market? Think of it. Imagine you're the RBI governor, right? This bank is already incurring losses. Should you allow this bank to continue to provide loans in the market? If you say yes, my dear, the losses are very high already. What is the guarantee that the loans that they give will not lead to again losses to the bank? Are you not putting the deposits of the customers in jeopardy? Are you not basically increasing the risk for customers to keep money with this bank? But what should the bank do then? What should the bank do in this situation? RBI says, we will introduce the idea of a narrow banking. What is this narrow banking? Rather than allowing the bank to, right, invest in gold, invest, right, and purchase, let's say, G securities, give loans, etc., etc., we will not allow all of these. We will not allow the banks to do all of this. We will simply allow the bank to invest that money in G securities. We will simply ask the bank, don't give loan, don't invest in gold, don't invest in corporate bonds, nothing. Take your deposit, you want to invest in the market, purchase G securities and sit quietly. That's it. Don't give loans. Invest in G securities. Now, please tell me, can I say functions of the bank have been narrowed down? Let me know. Can I say based on this, functions of the bank have been narrowed now? Narrowed means made lesser rather than wider functions. Right now, only narrow functions will be given to them. That is concept of narrow banking. Idea of a narrow banking. Greater autonomy should be given to the bank board. Right? Let the banks decide everything. Right? Let the banks decide. RBI should not keep on intervening. RBI and Government of India should not intervene always in the system. Let the banks decide. Regulator should not be the owner. That is, RBI is the regulator of the banking sector. Correct? RBI is the regulator of the banking sector. Who owns RBI? Government of India. So have a look at the dichotomy here. Have a look at the dichotomy. On one side, Government of India through RBI regulates banking sector. Government of India through RBI regulates banking sector. And on the other hand, Government of India owns many of the banks in the market. Can you find conflict of interest here? Look at this. On one side, Government of India through RBI will regulate banking sector. On the other side, government itself owns many banks in the market. State Bank of India, Punjab National Bank, Canara Bank, Bank of Baroda, all these are public sector banks. Public sector banks simply means more than 50% of the ownership is with Government of India. So on one side, you are acting as a regulator. On the other side, you are the owner. Right? There is a conflict of interest. Regulator should not be also become the owner of the banks. Right? That is a recommendation of Narsimham Committee. Right? So these are some of the recommendations of Narsimham Committee. Any difficulty regarding any of the terms, any of the problem, please do let me know. Provide greater autonomy. Autonomy means freedom. Autonomy simply means freedom. Give more freedom to the public sector banks or even board of the banks. Let them take their own decisions. RBI will keep on interfering. Government will keep on interfering in the functioning of the banks. Don't do that. Let them take decisions. Okay? Large and national bank, my dear. Large banks generally means it will provide loans to, let's say, bigger borrowers in the market. It will focus on infrastructure loans, etc., etc. Whereas nationalized banks will be present in cities. They will focus on, let's say, normal customers. Right? That was the objective. Every bank will have a different objective. Okay, done. Anything else? Any other question related to what we have discussed? What is the merit and demerit of merger of banks? My dear, did we not discuss this? Please do let me know. Did we not discuss this? What is the merit and demerit of bank merger? Right, today itself we have discussed this. Not 1 week ago, not 2 weeks ago. We have discussed this today itself before the lunch break. Right? Please observe. Okay. There is one more interesting question. Is it live or recorded class? My dear, I'm taking questions from your side, right? Let me know. I'm taking even audio questions from your side. Right? I'm asking you any questions are there. Right? Please do let me know. Right? So please, this is not a recorded class. This is a live session. If you have a doubt, please do let me know. I will answer it. Okay. Can you repeat the concept of leaderboard time? I don't know what you're asking. Please do clarify. I'm unable to understand what is the question actually. Okay. Is there need to read Swift credit card MICR for banking sector? Yes, it is. I'm sorry, banking exams it is required. For UPC exam, MICR, right? Magnetic ink character recognition, credit card as a concept. No, that all of that is not required. Okay. This is more than sufficient. Okay, let me go to the next one. Last concept under banking sector, NBFCs. What is a local bank? Right? Local bank as a concept was promoted. Even some local banks are there. These are similar to rural banks, only in certain regions, only covering certain regions, right? Very, very few areas are covered. That was the concept of a local bank. Okay. Okay. Next, let me go to the last concept in the banking sector. Of course, banking is over. This is a non-bank. NBFC. Right? Before you start asking, NBFC means non-bank financial company. Non-bank financial company. Let me start with an example. All of you heard of Muthoot Finance? Let me know. All of you heard of Muthoot Finance, right? These are the ads. Based on the ads, I'm asking you, right? I'm pretty sure all of you have seen this, right? Muthoot Finance, they will simply say, take this, that, etc. Right? So argument is simple. Apart from the bank, otherwise, sir, any other example? Have you heard of Bajaj Finance? Have you heard of Bajaj Finance? Bajaj Finance is also an NBFC, by the way. Okay, Muthoot Finance, Bajaj Finance. There are many other gold, right? Gold related companies. IL&FS, Infrastructure Leasing and Financial Services. That is also NBFC. Again, don't by heart the names because there are more than 10,000 NBFCs in India. More than 10,000 NBFCs are there. You don't need to remember the names. But just to make it much more relative, I'm giving you examples here. Now, what do you mean by non-bank financial company? NBFCs are financial institutions which will provide banking services but without meeting the legal definition of the bank. This is the simplest definition as far as I am concerned regarding NBFC. Many of you will not trust me. Many of you will say, hey, this is definition not correct. You will go to right Google, type NBFC definition plus RBI, Reserve Bank of India. If you do that, it will take you to a page in the RBI website. And the definition of NBFC is not one line. It is not two line. It is a very big paragraph. You can check it later. Right? You can check the definition later. You will be puzzled looking at the definition of NBFC. That's the reason. Do not by heart it. Simple definition. I will give you explanation. Understand. NBFCs are financial institutions that provide banking services but without meeting the legal definition of the bank. Now, what do you mean by this? Let me give you the basic difference between what is a bank, what is an NBFC. On one side, I'll write bank, and the other side, I will write NBFC, non-banking financial companies. Banks are right regulated under Banking Regulation Act of 1949. Do you remember this? Banks generally will come under the regulation of Banking Regulation Act of 1949. Yes or no? These are registered, come under the regulation because of this only. On the other side, NBFCs are registered under the Companies Act. These are established under Companies Act of 2013. Some of the books will say Companies Act of 1956. That is the old version of Companies Act. The latest version is Companies Act of 2013. So Companies Act of 2013, under this NBFCs are registered. Second, the bank will collect both, right, the demand deposits as well as time deposits. The bank is allowed to collect demand deposits as well as time deposits. Whereas NBFCs are only allowed to collect time deposits, they are not allowed to collect demand deposits. For example, many of these NBFCs will issue right time deposits. They will right issue time deposits. But please understand, unlike a bank where time deposit can be for 90 days, that is 91 days, where time deposit can be 7 years, time deposit can be 10 years, time deposit can be for 330 days, right? In case of time deposits issued by NBFC or collected by NBFC, these are generally having a duration in the range of 12 months to 60 months. These generally have a duration of 12 months to 60 months, 12 to 60 months. That is the duration of time deposits collected by NBFC. Are they allowed to collect demand deposits? No, NBFCs are not allowed to collect demand deposits. Banks are involved in giving loans. Banks are involved in giving loans. Even in case of NBFCs, many NBFCs are there which will provide loans. They will also provide loans. Okay. The deposits which you keep in the bank are insured. Deposits are insured. Deposits are insured. Through what? DICGC. Whereas NBFCs, deposits are not insured. No insurance whatsoever to the deposits that you keep with NBFCs by DICGC. Fifth one, right? The banks are part of payment settlement system. Banks are a part of payment settlement system. I'll explain to you this. Just give me a minute. Whereas NBFCs are not a part of payment settlement system. Now, what do you mean by part of payment settlement system? Please let me know. Have you heard of IMPS? Let me know. Have you heard of IMPS or NEFT, RTGS, etc.? Right? Or if some of you are saying no, have you not heard of NEFT? Arey Baba, be very careful. Right? Those who are saying no, be very, very careful. This is very basic, common, general knowledge question. General knowledge. Right? Even if you have not read books, you must have heard of RTGS, real-time gross settlement, NEFT, National Electronic Fund Transfer, IMPS, immediate payment system. All these are very much relevant. Banks are part of this. You can transfer money if you have a bank account using any one of them. Using any one of them. Of course, conditions are there. One will differ from one. Don't worry about it. Right, so these are right basically the types of payment settlement system which can be used by the banks to transfer funds. NBFCs are not part of it. Right, NBFCs are not a part of payment settlement system. Right, that is, in if you have a, let's say, a time deposit of 5 years in NBFC, there is no payment settlement system in NBFC. They will simply transfer the money into your bank account. Right, and the sixth very important difference is banks are allowed to issue checks. The banks are allowed to issue checks. They can issue checks in their own name. That is, if you're a customer of SBI, SBI will issue checkbooks of SBI. Whereas in case of NBFCs, these NBFCs are not allowed to issue checkbooks. Right? They are not allowed to issue checks on their own name. Right? So these are the very important differences between a bank as well as a non-bank financial company. Now, based on this, can I say that NBFCs will also provide certain services similar to the bank, but without meeting the technical definition of the bank? Let me know. I'll repeat it again. Right? I've made a comparison. Between a bank and NBFC. Look at it and tell me. I'm giving you a definition now. NBFCs are financial institutions or companies which will provide services similar to the bank without meeting the technical definition of the bank. Any problem with this? Any problem? Please do let me know. Please go through this again. Any issue, please do let me know. Right, so financial institution which will provide banking services without meeting the legal definition of the bank. These are registered under the Companies Act of 1956. I've written 1956. Even if the book says 2013, nothing wrong with it. Third, these have been kept under the regulatory control of RBI from 1997. That is, NBFCs will have to get a certificate of registration from Reserve Bank of India. They will have to get a certificate. But please understand the next point here. These NBFCs are divided. These NBFCs are divided into two parts. One, the deposit taking NBFCs, and the second one is non-deposit taking NBFC. One is a deposit taking NBFC, second one is a non-deposit taking NBFC. Generally, the deposit taking NBFCs will be under the regulation of RBI. The non-deposit taking NBFCs, there are different regulators in the market. There are different regulators. For example, mutual fund company. It will come under the regulation of right SEBI, that is Securities Exchange Board of India. Insurance companies are there. It will come under regulation of IRDA, Insurance Regulatory Development Authority of India. Pension companies are there. It will come under the regulation of PFRDA, Pension Fund Regulatory Development Authority. So there are different regulatory authorities so that there is no conflict. Some of these NBFCs are regulated by other authorities as well. Deposit taking NBFCs must be registered with RBI, and some of these NBFCs are regulated by other agencies as well. Right? So these are certain introductory points regarding NBFCs. Now, RBI, not Government of India, Reserve Bank of India has introduced a new system of classification. It is called as a scale-based classification so that regulation can be made much more stringent, much more strict on the NBFCs. Why this kind of a classification is done by RBI? RBI says, just like a bank, NBFCs are also very much important for the economy. If a bank fails, right, don't you think the economy will experience a certain disruption? In the same way, if NBFCs will also start failing because they are collecting money from the people, although in a different way, they are collecting money. They are issuing bonds in the market, right, collecting money, etc. Even if NBFCs will start failing, there will be certain impact on the economy. So because we want to regulate bank, we have very strict regulations. That is RBI. RBI says, because we want to have these kind of right, we do not want to have these kind of disruptions. We have very strict regulations over the banking sector. But similar kind of regulations are not present on NBFCs. Although these are very important, similar kind of a strict regulation is absent. So what I will do? I will impose a new system. I will introduce a new system wherein more regulations will be applicable on NBFCs. And this is called as scale-based regulation. Scale-based regulation. And in case of scale-based regulation, NBFCs are classified under 4 categories. I'll repeat it. NBFCs are classified into 4 categories: the base layer, middle layer, upper layer, and top layer. And in terms of arrangement, generally they will arrange all this classification in a pyramidal structure, right? That is, the lowest layer will be called as a base layer. The second layer, right? A second layer will be called as a middle layer. Above that, this will be called as a upper layer, and the topmost, of course, will be called as top layer. Right? This is a pyramidal arrangement. Sir, why? Why are you arranging all of them in a pyramidal structure? Simple. Most of the NBFCs, I repeat, most of the NBFCs will come in the base layer. Is it okay? Don't worry about technical definitions here, right? All of this is very technical. Don't get into it. Understand the basic idea. Most of the NBFCs will fall in the base layer. And because most of the NBFCs, I said in India, more than 10,000 NBFCs are there, more than 9,000 NBFCs are going to be there in the base layer itself. And that is the reason, please look at the pyramid now. Can I say highest amount of area in a pyramid is there in the base layer? All of you will agree? Highest amount of area in a pyramid is there in the base layer, right? High, very high, right? That is a representation. Because most of the NBFCs will fall in the base layer. That is the reason the lower part of right the pyramid is represented as base layer. Above that, there will be middle layer. Which kind of NBFCs will fall in the middle layer? Deposit taking NBFCs and non-deposit taking NBFCs which have asset over right 1,000 crore rupee. They will be kept in the middle layer. And the top 25 NBFCs in terms of asset size. The top 25 to 30 NBFCs in asset size will be kept in the upper layer. Now RBI says nothing will be kept in the top layer as of now. No NBFC will be kept in the top layer. Right? These are the classification. Now next point. What is the importance? What is the importance? RBI says, if you keep moving from the base layer to the upper layer, as you keep on moving up like this, the conditions that I will impose, the regulations that I will impose will become more and more strict. I'll repeat the point again here. There's a whole list of conditions. As far as I'm concerned, you don't have to by heart it. And all these are technical. They will talk about concentration norms. They will talk about the amount of exposure to the the loans given to individual borrowers, loans given to companies, investment done in this, loans raised from the bond market, how much is your capital adequacy ratio. So many conditions are there. No need to buy heart. All of that is very technical. Argument is simple. As you keep on moving from the bottom part of the pyramid to the top part of the pyramid, as of now, no NBFC is there in the top. As you keep on shifting from base to middle, middle to upper, regulations will become more and more strict, so that those NBFCs which are important in terms of asset sizes, in terms of collection of deposits, these NBFCs are very important for us. So we will impose more regulations on these NBFCs. That is the reason this kind of a pyramidal arrangement is done. Now, why the top layer has been kept vacant? Why no NBFC has been kept in the top layer? RBI says, these are the regulations that I have. And let's say, even with these strict regulations, some of the NBFCs will start failing again. Even with the most strict regulations, let's say NBFCs will fail. Then what I will do is, I will introduce more strict regulations. And that will happen when I will move these NBFCs into top layer. This is the new type of a scale-based regulation, SBR, that RBI has introduced in the context of non-banking financial companies. Okay. Now, last two slides. After that, we'll stop. If you have any questions, you can ask me. What is the importance of NBFCs? What is the importance of NBFCs in India? Point number one, these NBFCs will provide to risky borrowers. These NBFCs will provide loans to unbanked borrowers. What do you mean by this? Let me explain. Imagine here is a borrower, a person who wants to take a loan. But the CIBIL score, the CIBIL score for the person is very, very low. CIBIL score is very low. Now the person will go to the bank, apply for the loan. The bank will look at the CIBIL score and say, it is very risky to provide loans to these kind of borrowers. Why? The CIBIL score is very less. So the bank might simply say, sorry, we will not be able to provide loan to you. Now, same borrower will approach an NBFC. Same borrower will approach NBFC. NBFC says, okay, I will give the loan to you. In fact, this is correct. It is true, by the way. NBFCs will provide loans. But there's a catch here. Someone will be thinking, but sir, the borrower is very risky. NBFC says, okay, I will give you loan, but I will charge a slightly higher rate of interest. Simple. I'll give you loan. I will charge a slightly higher rate of interest. In fact, many of the times, NBFCs are willing to provide unsecured loans, but they will charge a higher rate of interest. So tell me, if a borrower has a very low CIBIL score, and the bank says, sorry, we will not be able to provide loans to you, can they get loans from NBFCs? Of course, yes. Now think of this. Next point I'll tell you. Imagine I'm this kind of a borrower who has very low CIBIL score. I will take a loan from NBFC. I will repay the loan on time. Simple. I will take a loan from NBFC. I will repay the loan on time. What will happen to my CIBIL score? Tell me now. What do you think will happen to my CIBIL score? Will my CIBIL score remain same, or will it improve because I'm making the prompt repayment now? Don't you think my CIBIL score will start increasing? Now, with a better CIBIL score, with a higher CIBIL score, In the future, can I go to a bank and take a loan from the bank? Does it make sense to you? In the future, if I need a loan, can I approach a bank with a better CIBIL score? Can I take a loan from the bank? Of course, yes. That is the point number 3. That is a point number 3. NBFCs can help even the unbanked borrowers to become bank borrowers. Point number 2. Many of the NBFCs are specialized to lend to specific sectors. For example, if you people have gone to, let's say, right, Chroma showroom, have you heard of this? There is a Chroma electronic showroom. Or if you have been to Reliance store, right, have you seen certain people from Bajaj, right, sitting there? Bajaj Finance, certain people from Bajaj Finance, right, will be sitting there. Why? Because understand this, these kind of right NBFCs are specialized in providing you loan to purchase electronic equipments. Simple. You want to purchase a mobile phone, the seller, right, the salesman will simply say, salesperson will simply say, sir, if you find a payment of one time is difficult to you, you can take an EMI, right? We have financing services. Bajaj Finance person is sitting here only. We have financing services, right? Don't you think these are specific type of borrowers? You want a gold loan, right? Muthoot Finance is there, Manappuram is there, right? There are so many NBFCs which will provide you gold loans. You want a housing loan, there are, right? Best example, current affairs, HDFC, right? There was a housing unit of HDFC which has been merged into HDFC now. All of you will agree? So that was an NBFC which was specialized in housing loans. NBFC specialized in providing housing loans, right? So understand the logic here. These types of NBFCs are specialized to provide access to credit, to provide loans to specific sectors. These are the experts in that area. Next one, it will help in creating demand for goods and services. It will help even in capital formation. Right? Let's say NBFC will give loan for purchasing tractor in agriculture sector. NBFC will give a loan for, let's say, a person to purchase a vehicle to supply milk to the market. Right? Is it not going to create, right, demand as well as add to the capital formation? Of course, yes. So these are certain reasons why NBFCs play a very important role in the economy. Having said so, are there any concerns? Are there any issues with the functioning of NBFCs? Of course, yes. Let's go point by point. First one, NBFCs generally understand this. NBFCs will either collect deposits from the customers. What kind of deposit? Time deposit. Or will take money from, that is, take a loan from bank, or will go to the market, issue certain instruments such as bonds and borrow from the market. But please tell me, in the last 2 years, that is, I'm talking about pandemic, don't you think the ability of the NBFC to collect term deposits would be affected? NBFC's capability to issue bonds in the market, because the market suffered because of the pandemic, it will also be limited. Banks were also suffering because of the pandemic. How much loans they'll be able to provide to NBFCs, that would also be affected. So the funding issues plagued the performance. The funding issues affected the performance of NBFCs. NBFCs found it very difficult to raise funds from the market. That is the point I'm trying to make here. Point number one. Point number two, if NBFCs are not able to collect sufficient amount of funds, what do you think will happen to their lending activities? What do you think will happen to their lending activities? Don't you think automatically the lending activities of the NBFCs will also be affected? Right? That will also be affected. Third, just like a bank which provides loans, NBFCs are also providing loans. So can there be issue of NPA even in case of NBFCs? Let me know. Can there be an issue of non-payment of borrowers even in case of NBFs? NBFCs, of course, yes. There are certain NBFCs which are giving loans. So automatically, if the borrower doesn't repay, that problem will be persisting even in case of NBFCs, right? And just like banking sector, which will collect a deposit, give a loan, here also NBFCs are collecting money and giving loan. Can there be a problem of asset liability mismatch even for NBFCs? Again, answer is yes. Right. So these are some of the issues that have been plaguing non-banking financial companies in the last 2 to 3 years. Okay. So that is the end of the discussion for you people regarding this very big chapter, very big chapter of banking. I know the chapter is very big, and if you ask me, sir, why this chapter is so big, why did you discuss so many things under banking chapter? Right, the UPSC gives a very high weightage to this chapter. Simple reason, UPSC gives a very high weightage to this chapter, especially from the prelims perspective, and that is the reason I've spent so much time, right, discussed so many things from the chapter of banking. Now if anybody has any kind of a doubt, please do let me know, right? Otherwise, right, we can take up something or wind up the discussion. Anybody has got any kind of a doubt, please do let me know. I've activated even the live call feature. The live call feature is activated. If you have a doubt, if you want to talk to me, ask me question, please use it. Huh? Would slump condition? What is that? Would slump condition? Sir, is it important for mains also? In the beginning, yesterday, I've told you this. UPSC, for whatever reason, has not asked questions from the banking chapter in the mains. I don't know what is the reason, but it has not asked questions from this chapter in mains. But that doesn't mean that they will not ask. They can ask you. They can ask you. Okay. I'm reading 11th and 12th NCRTs with Nitin Singhania book. It will be sufficient for UPC, or do I need to add something more than sufficient? If you want, read ninth as well as a 10th NCRT book. Read ninth as well as 10th NCRT book plus, right, the one static book plus current affairs. That should be more than sufficient. Huh. Entities. Okay. Okay. Any other question? Arey Baba, ask no. If you don't have any question, then I'll start with next chapter. Okay, Vivek, please receive the call. Any other questions? Any other queries? Any other queries? Which optional subject is good for me? Again, there is no universal answer. Right? I'll tell you again, please understand whatever your background is. Right? I'll simply tell you, right? Simple funda. Right? This is my advice to you. Whether you want to use this or use something else, entirely up to you. Right? Only two things to consider. One, are you able to understand this subject or not? Are you able to understand this subject? For example, many students who find GS paper 3 economics difficult ask me a question, should I take up economics optional? Think of it. What they're asking, think of it. Right? They find GS, and again, this is nothing wrong with that. Right? Your background could be different. Right? This subject, you might find it difficult. Everybody has one weaker point. Right? One weak subject will be there for everyone. So the argument is, if you find GS paper 3 economics difficult, then my recommendation is please don't take economics as optional. No doubt, economics as an optional is a very important scoring subject. But provided your background is economics, right? You are good with economics. And second very important point is, right, basically look at the question papers, last 5 years question papers. And if you look at the question papers, automatically, right, you will come to know what is the standard, what is the level of question being asked by UPSC. There also you can make up your mind whether this is right, your cup of tea, or this is not your cup of tea. In simple terms, whether you can handle the subject or subject will manhandle you, right? You can easily understand there itself. And the third, right, for some of the subjects, right, do not be dependent on coaching, right? And there are no good coachings for that as well. For example, if you ask me, sir, economics optional, right, I have not seen any good coaching facility for economics optional. And even if you talk to the toppers from the subject of economics, they will tell you one factor, one point, that they made self preparation, they did the self preparation, right? So that is the reason, consider all these factors, then you decide which is the subject which is right, which you are comfortable with, which is also a scoring subject, and which you can handle it very easily in the sense compared to other subjects. Okay, this would be my recommendation to you people to choose optional subject. So do you take class on Saturday, or it will be on next Sunday? Only a schedule shows there is no class on 29th. As of now, right, 29th is a holiday. I'm sorry, Saturday is a holiday. Sunday will be a class. If anything changes, go with whatever schedule has been given to you until and unless anything has been conveyed to you specifically regarding it, right? Any change is there, right? Don't worry, whatever schedule is there with you, please go ahead with that schedule, right? We'll follow that schedule itself. If something else changes, you will be conveyed, don't worry about it. Okay, Vishal, please pick up the call. Is the book provided by UNF? One static source, I think that's more than enough, more than sufficient. Again and again, I'll keep on hammering one point to you people. Do not worry about static sources. Use one, more than sufficient. You want to score very good marks in UPSC? Read current affairs. Update your current affairs. Right? If you don't trust me, look at previous year question papers. Automatically you'll understand. Okay. Any other questions? Sir, NCRT or state book which I want to study? Okay, here is one more point. Some of you are asking, sir, which NCRT? I'll give you two options. You choose any one of them. Either if you want to read NCRT books. Read NCRT books. That's more than sufficient. Or else, if you feel NCRT is right, very difficult, very technical, etc., I'll give you one more optional. One more option. That is Tamil Nadu textbooks. Tamil Nadu board, TN board textbooks. Right? These are also very good. Right? TN, that is Tamil Nadu textbooks, board textbooks, 11th and 12th. Economics, 11th and 12th. But this is my concern. I will raise it directly to you people right now. This is my concern. NCRT books are small. TN board textbooks are very big. Right? These will have 500 pages, 600 pages, 800 pages. These are slightly bulky, slightly bigger. Now, based on your requirement, based on the time that you have, based on the capacity that you have, you decide whatever you want to use. But here also, don't read both of them. Don't read NCRT, then don't start reading Tamil Nadu board. Not needed. Read only one, more than sufficient. Okay. Anything else? Which optional is easier? History, polity, or geography? My dear, you're asking that to an economics faculty. Let me know. You're asking that to an economics faculty. How can I answer that? Those who are saying, I gave a call, you're not picking up. My dear, I am giving a call continuously. It shows a ringing. Trust me, promise. By the way, it shows the ringing. But on your side, you are not receiving that call. For example, Vivek, right? I'm giving a call to you only, my dear, now. Okay, anything else? Anybody has any kind of a question? No need to read statistical economics NCRT, not required. Not required. Don't read statistics, not required. Okay. Sanchit, please receive the call.
Hello, sir. Good evening, sir.
Good evening, Sanchit.
Doubt, sir, that a normal bank are having a doubt, sir.
Okay, please go ahead.
That the shadows of the bank in 2018 the financial crisis, sir, that one, it is still taking is up to getting prime subsidies, sir.
Sanchit, can you please repeat the question?
Yes, sir. Sir, the shadows of the bank 2008 financial crisis, the
Ah,
subsidies of models of the US bank, US non-banking or financial company, sir.
are you reading it from a book or a newspaper or a magazine?
Magazines, newspapers, sir.
Correct.
Both.
Right. So you are reading a technical statement. There itself, I understood. When you use the term shadows of 2008 global financial crisis, nobody talks like that. Please understand the logic is simple there. Back in the year 2008, there was a crisis in USA, right? There was one bank, very big bank. That bank collapsed. Right, that bank collapsed. As a result of this, the whole financial sector in USA also came under pressure. Right, there was a crisis in USA, and that also spread to many other countries. In fact, even India was affected because of that crisis, and that is the reason it is called as a global financial crisis. Right, so argument is simple. Even today, right, there are certain issues in the banking sector in USA which is affecting the stability in the banking sector of USA. That is what they are trying to tell you there.
Thank you, sir.
Yeah, take care. Okay, any other question? MM going down. My dear, you tell me what is the context? Right? What is the context? You please tell me. SLR, CRR are the only tools which can impact money aggregates. No, my dear. What if RBI will print currency and issue it in the market? What if RBI will print more currency, issue it in the market? Can it have an impact on money multiplier? Of course, yes. There are so many factors. Money multiplier. Right? Money multiplier. You're asking this question. The money multiplier in an economy increases with which one of the following? If people will keep the deposit, more deposits in the bank, automatically money multiplier will go up. That's the argument. And on the other side, I said, if RBI will start increasing CRR, SLR, right, everything, right, that will basically lead to more money taken out of the system, right? And as a result of that, money multiplier might get affected. Okay. Okay, done then. So let's stop the discussion today here. Right, let's stop the discussion. It's 8 o'clock. Next week, we'll continue with the discussion from the next chapter. The next chapter that we'll be discussing is fiscal policy budgeting. We'll discuss the concept of budgeting. What is budget? How does government prepare a budget? What are the important terms in the budget? Right? What is fiscal deficit, revenue deficit? How do we calculate, etc.? We'll discuss. Right? I will start the discussion with the idea of right the budgeting exercise itself. So meet you again in the next class. Take care. Good night.